great to be here, and thank you to the Chamber of Digital Commerce for having us today. And so I feel like this panel is a little bit of back to basics, and so talking about payments. When you think about the original white paper and the layout of what cryptocurrency and Bitcoin at the time could do, it was really around a peer-to-peer payment system. And it was about how we can move value through the blockchain, through distributed ledger technology, similar to the way you can move any other type of information over the internet. And I think that was what excited a lot of us to get into this space. And up on the stage, I think you have two veterans. Stephen, of course, I think has been in it longer than most people, back to 2011, and I started at Circle in 2013. But when we talk about payments, really, you're talking about a $100 trillion industry, cross-border payments, about 27 trillion, a lot of opportunities. And we've come a long way since 2008 in terms of the technology, in terms of the way the industry has evolved. And I think we still have a ways to go. But I think what's exciting is I think the conversation has kind of migrated back to the real good use cases around in the payment space. And I think we had this kind of period where we had a lot of hype around cryptocurrency and the ability and the investment side, the price going up, the different types of investment vehicles in the space. But to me, payments, especially the cross-border piece and remittance, there's a lot there to examine. And so I guess I'll ask you, Stephen, where do you see the real opportunities, the good use cases, and what is your perspective, having been in this for so long?
Well, obviously, we're believers in the payments use case. But when we look at the blockchain as a technology, we think most databases will become blockchain-style databases in the future. And so we're just at the very beginning of this sort of token economy. But for us in particular, sometimes I think we're the most one of the most boring companies in the space in the sense that we just build tools to allow people to do payments using a blockchain. But we have two, sort of fundamental theses at BitPay. One is that most digital assets will ultimately be issued on a blockchain, and that second, that most payments will be conducted on a blockchain. And we just aim to build the best platform for letting businesses conduct those payments. In our the type of customers that we see using the platform today, they run the gamut of every kind of business that you can imagine. But we see a lot of traction in like international supply chain type of payments, where there's a company in one country that needs to pay a vendor in another country, and they find great value and efficiency in using our platform to do it. But those payments, are anywhere from the few tens of thousands on up to hundreds of thousands of dollars in value.
And in terms of breaking down, in terms of what do you see as the real benefits? When we look at the existing payment system and some of the pain points, where can some of the technology really benefit, and who can it benefit?
Well, the answer to that question is different depending on which blockchain you're talking about. But if you talk specifically about the Bitcoin blockchain, it's the most secure, most widely used blockchain out there. And if you want the most secure, most final payment, the blockchain, the Bitcoin blockchain is the one to use. And so where speed and finality are really important, in a lot of cases you have two companies located in two different countries that where that finality of the payment is really important. That makes our platform much more compelling than a lot of other options that they have available.
Do you think in terms of the merchant piece, do you think we're going to get to a place where that kind of adoption picks up again? And there's, what do you see that? I mean, there was a lot of early days. There was a lot more in terms of merchant use cases, and and people considering using cryptocurrencies for different types of transactions. How do you see that evolving going forward?
Well, I wouldn't agree that we've seen any kind of drop off on the merchant side of it. We're processing more merchant payments today than we've ever processed.
What kind of numbers are we talking about?
Well, about 40% of our volume is more the B2B use case. The remainder of that, probably 30 to 40% is really a merchant style payment, and that could be an online e-commerce payment, or it's predominantly online and e-commerce type payments. We do have tools for in-person payments, but that's more of a strategic initiative for us to make sure we're on all the platforms and we can handle the in-person payments. Um, yeah.
Yeah, and then in terms of like the other use cases, or where do you see a lot of value? There's, when I was at Circle, we were talking more about the P2P use cases, and obviously, I think there's a lot of ability to reach underserved, underbanked areas and remittance. How do you see that? Where you see that? Where has that been, and where do you think that's going as well?
Well, certainly P2P payments, all the blockchains support that. You don't need BitPay to process a P2P payment. Our focus is on building tools for an e-commerce company, for example, to integrate with their platform and build a great end-to-end payment experience. In terms of remittance, I've always thought there are a few companies that came and have since gone away that were trying to build in-person services for remittance and then incorporate Bitcoin or blockchain technology into that some way. And that seemed kind of silly to me when you can just send, a Bitcoin from one person to another, no matter where they are on the internet. And, all you need is like exchangeability on either end to convert that in and out of your local currency. So it's kind of the system already supports remittance, as it is. You don't need a company to actually implement that. But we do see it. We have a debit card, a Visa debit card that our wallet customers can use, and that allows them to convert cryptocurrency into dollars on that Visa card. And we do see cases where you might have parents that are have got this card for their children that are in school in the United States, and then they'll use Bitcoin to top up their debit card so they can spend it while they're here. So. That's a great use case.
Yeah, I'm also interested in what you think. I mean, there was some discussion yesterday here at the summit around JPM coin and around, I think one of the other big pieces when we think about payments, it's not always the B2B or the P2P, it's really the back end, right? Or the interbank settlements, which is really clunky and as problematic in terms of payments taking 3 days to process and to settle. And now we have some pretty good experiments out there. We have, JPM coin, we'll table for what you think of that. But, we have Signature Bank, we have others really trying to experiment in this space. And of course, Ripple is, has a whole business model around this. And there's questions around, what is the best play here? But from your perspective, how do you look at it?
Well, blockchains are built differently, right? You've got on one extreme, you've got the Bitcoin blockchain, which is probably the most decentralized blockchain that exists. And it's got thousands of nodes that are building that blockchain and securing it. You can go all the way to the other extreme and have a blockchain that has one computer securing the whole blockchain, and then you can have everything in between. So when we look at like a Ripple, for example, that's something that has fewer nodes that are securing it, and fewer organizations that are actually securing that blockchain versus, say, Bitcoin, where anyone can help secure that network. I think there are use cases and scenarios where both of those are kind of needed. So, and you asked about JPM Coin. If that takes off and is adopted, then sure, we can add it to BitPay's platform, if they'll let us.
Yeah. I want to shift gears in terms of just thinking through adoption. And, I think we spent a lot of time collectively as an industry thinking about kind of what's going to really have a impact from a consumer perspective. And I think consumer behaviors have changed a lot, and consumer perception is important in this space. And stories like the one out of Canada where, private keys were held by a CEO and couldn't be recovered. And then when they were, they found there was no money left. Where do you think we are in terms of, from an ecosystem, in terms of perception, and how will that impact adoption over the coming years?
Well, I think the adoption is coming. Everybody would like to see it more faster, but it's happening. When we started in 2011, we were happy to get 5 or 10 transactions a day. And today we're processing over $1 billion a year in transaction volume. So it's happening. I think there are common objections that people have. One of the biggest is the volatility of cryptocurrencies. And most companies that want to do payments, they want to conduct those payments either regardless of whether they're receiving or sending they want to conduct them in their operating currency. They don't want to deal with Forex when they have to transact and use a payment system. So it's usability, things like that need to get worked out. BitPay has traditionally been on the receiving end and helping companies receive payment done in Bitcoin or other cryptocurrencies. But for our customers, they don't actually have to take Bitcoin onto their balance sheet, and that's really important. Our customers, by and large, and an interesting statistic, when we started out in 2011, over 90%, probably 93 to 94% of our customers took their settlement for their payment processing in some national currency, whether that's euros or dollars or pounds, and not in cryptocurrency. And if we look at that stat today, it's exactly the same. It has not moved at all from 2011. By and large, most of our customers want their national currency. And the reason is that because that's their operating currency. And their accountants don't want to deal with having some cryptocurrency that can go up and down, and have to account for that on their balance sheet and have to account for gains and losses of that. So we are working on those issues, coming up with solutions that don't require customers to hold a cryptocurrency and don't require them to do the accounting work that's needed for that.
Yeah, well, certainly a lot of opportunities. What do you see as on the risk side, and how do you see as regulation still impacting your business and business in general?
Yeah, the regulatory framework applies to our industry just like it does every other industry. And I like to tell people regulations apply to people and to companies. They don't apply to networks and things, And so we have to make sure that we always follow those regulations. But I think we can actually be better as an industry than the legacy, banks and payment providers at providing that compliance and addressing those concerns with, criminal activity and money laundering and such.
Yeah, I totally agree. I think it's just another financial services industry, and it's a kind of a taking a risk-based approach and really understanding what the unique risks are. And that's the same thing when we have conversations with policymakers. It's the same thing we discuss in terms of where should the regulation be placed. And I think it's really on those type of activities and not to regulate the technology, right?
Yeah, that's right. And regulations aren't perfect, but what I do tell everybody at BitPay and others is that by and large they're put in place for a reason, and they're usually very good reasons that they're put in place. And we never like to go out and sort of communicate that we're doing something because the regulations say we have to do it. Mm-hmm. It's usually a good thing to do regardless of whether there's a regulation there or not. And oftentimes we're going above and beyond what the regulations strictly require because it mitigates the risk for our business, right? And it's important, for us as a company that we address those risks. And so, yeah.
So I guess final question, if you were an investor in this space, or if you're talking to an investor, what advice would you give them in terms of the path forward, in terms of the real opportunities and how to look at payments in general?
Well, I was going to talk about more blockchains more broadly. I mentioned earlier that as I see it, most databases, most transactional databases will eventually become blockchain databases, and they need some kind of token to incentivize the security of that database. We don't see too many outside of Bitcoin that are starting to address other use cases beyond payments. Ethereum is interesting. It's doing token issuance, different kinds of tokens. So that's clearly a use case. But I would look to new blockchains that enable, new kinds of use cases that might be replacing an old business that was based around that had a business model that was built around a centralized database, and now you're introducing a blockchain to handle those protocols that people use to coordinate with each other, and be an investor in those tokens that are solving real use cases.
Great. Well, I think we're out of time. Thank you, and thank you, Stephen.
All right.